So I've got a lot to talk about right now. All focused on the squeeze theme, and this is just something that's been really standing out to me this week. I've been getting to see a lot of incredibly handy nuances and realizing how I can participate in these large expansion moves, or squeeze moves essentially. So squeezing up towards obvious buy side. Very messy charts at the moment. It's got drawings everywhere. I'm aware of that. Um, but you see both gold and silver having these nice squeezes higher. I did this markup a few days ago, just kind of giving the narrative of why it makes sense for us to squeeze, which is that on silver at least, really big rally. Anyone who thinks silver is slightly overextended after being up, well over 100% in just a few months, they're looking for a short. Very obvious pullback, the first one, so the obvious sell-off. The bears want to jump in. However, we failed to displace this. We rally straight back up on this day, so we didn't displace at all in the daily time frame. Came straight back up, consolidated above this really obvious low. Just took it out, so very shallow run below a low. That is the signature of a squeeze. Now I'll get to the narrative of that. But that essentially is a signature that we could be looking to squeeze. Rallies on the Friday, closes down here. We get some nice SMT with the low of day right at the close, and then a nice gap up on that Monday, on that Sunday open, ripping right towards this really obvious buy side. Work above it a few times and then continue pushing towards this high. So really nice in silver. I'll jump over to gold as well. You can see that I've got a few little drawings marked up here. Essentially, I was just long this. I didn't execute it very well. I can show executions later, but we've got some perfect equal lows down here with these equal lows with this hourly low. We failed to take that out, but we also took out this deep discount internal range. So the fact we took out some deep discount internal range, we're in a squeeze type of environment as well, meaning that we're unlikely to take out lows. And then, taking out deep discount internal range, new hourly candle fails to take out the previous hourly candle low. And there's a concept I use called the liquidity mid, where essentially if you get a closure past the midpoint between two liquidity pools, that's an indication that we're going to the next pool. So you'll see I've got this small parallel lines marked out here. Get rid of this one. But from this short-term high up to the next 1 minute short-term high, we get a closure above that midpoint right there. That's indicative that we're likely to draw towards this high. We then work lower, make a failure swing, and if you look on the lower time frame, this becomes a trend line. Now, this goes back to what I was mentioning before about silver and how it was significant that we barely took out this low. In a squeeze environment, the assumption is that traders are short and they are, for example, looking to sell the lower high. So lower high, they're looking for a lower low. If they're looking for a lower low, they're likely wanting to take profit below this low. So when price fails to do that, and then rapidly reverses in the other direction, that is what traps traders offside, and then you get these nice runs higher. You can see the same dynamic happening here on the low time frame, and this is an entry right here actually, so I should be long on a different account. Yikes. Well, if it makes another low, I'll get filled. If not, that's all good. And then stop loss would go at the impulse origin, which is essentially this swing low. And I'll give the logic behind that in a moment if I can get a nice fill. And also get filled on my challenge accounts. So this framework is called the squeeze reversal. I would like to get a fill on it, however. And what qualifies this as a entry is the fact that we have two 5-minute closures above the midpoint of this range, so above EQ. That's indicating that we're closing with a lot of strength above EQ, and we're likely to draw towards this high. Now, we did already hit an impulse high. I need to get rid of half of these drawings. We did already hit this impulse high. However, we are still clearly in a bullish trend environment, and the very fact that we've failed to take out this low, as already mentioned, is indicative of a bullish squeeze. So squeezing higher into the range. And it's a very specific model. Essentially, when the hourly candle fails to take out the previous hourly candle low, rapidly moves up towards buy side, then you're looking for us to draw up towards that previous hourly candle's high. So we'll see how this plays out. And the qualification for this particular entry method is the multiple candle closures through the midpoint of the range without retesting it. So as I mentioned already, I was long from down this in this area, and now you can see all those populating now on this account, but you'll also see that I didn't hold it very well. And yeah, reason behind that was a few things really. Like I was initially expecting us to hit this low. I saw the closure above the midpoint, got long, and then you see I get stopped out right here, perfectly at the low. Essentially, I figured that we shouldn't take out these lows because there were no inefficiencies in this lower part of the range, and it didn't take out the lows, but I had my stop just slightly above, obviously. Took me out, jumped back in, and then rode it up. And at this point, like I was a little bit low on the accounts, but you can see that it's a pretty small account, and I was down 20 bucks or so, meaning that I was getting near margin. So I ended up taking a bit off, taking some more off as we hit these highs. Decided to get long again after I recognized this nuance right here, the downtrend failure swing. That is a signature of a squeeze, that has been game changing to realize this, is that a failure to take out a low, so actually making equal lows as opposed to taking it out, that is actually a confluence that we will continue hitting higher. And that goes back to the same example I was saying here. The very fact that we barely took out this low and reacted from it, that is indicating that there are traders trapped offside looking for that lower low. The same thing over here. Anyone who's getting short up here, when price fails to take out that low, rapidly rejects higher, we now have traders trapped offside. With this trade, I do want to monitor it, however. Let's see if we can reach up towards the midnight price. If we can hit that, I'll probably, because I've got 2 lots on, I think, 2 micro lots. If we can hit that, I'll take one off and then look to see if we continue pushing up towards this high. But you'll see that we have been leaving a lot of really smooth lows. We are 7 seconds away from a new 15-minute candle, and the 45-minute candle is the one that tends to have really aggressive movements in one direction and usually against the way price has been going. So if we begin to aggressively tank right into this range, then that is a possibility with this particular candle. So I'm very conscious of that, but there's not much I can do really because my stop loss is at invalidation for this entry model. And I'm not just going to invalidate the entry model because of one single candle time. But yeah, essentially this is showing all of the signatures of a squeeze. And so I want to see if it does want to play out. Because we are in a bullish environment anyway, we're clearly in a bullish environment. There's no reason to try and fight it, although we did hit this very significant liquidity pull up here. And at the same time, I'll zoom out a bit and kind of show what I'm looking at. But this is actually a market maker model framework. And this is an observation I made a few weeks ago where the Sunday open, or probably also daily opening prices, but that constitutes a genesis of a move. So the starting point of a buy or sell program. Now in ICT terms, this is the market maker model framework where you have the original consolidation, first stage, and then second stage. Consolidation is typically depicted as a, just a classic consolidation like that. And then you usually have first stage, which is depicted as a intermediate term low, so below a short-term low, and then a shift high, so that becomes first stage. And then following that, you're looking for a second stage, which is usually a slightly shallower retracement. Then we come second stage, and then after that, this buy program has played out. It could continue pushing higher, or it could reverse at that point. And that's kind of what we're seeing right here. If I put this at the side, if the Sunday open is the original consolidation, we then have a short-term low, intermediate term low, that's first stage, breaks the high. So first stage is completed, drops into the range, IFD, partial entry into this gap, rallies higher. At this moment right here, second stage is played out. We have one drive, two drives, three drives. And at that point, it's it's getting a little bit more like this could be a top quite easily. So yeah, so maybe I'm forcing this model at the moment. I'm not too sure. I'd like to see if it does want to give another run up towards these highs. But yeah, I am quite aware actually at the moment of the fact I just basically walked through this and showed how it does really fit the profile of this being a potential reversal point. And then we have this aggressive move lower, leaving purple equal lows. But at the same time, showing those squeeze signatures, but then smooth lows as well. So yeah, maybe it's 50-50. I shouldn't be taking much size here. So I might actually, let's see what the 15 seconds doing. I might take half off just because I'm kind of invalidating it as we speak. Yeah, kind of in two minds about it, to be honest. I'll take half off just because I don't want to destroy this account on a trade that is 50-50. But the framework is here, and usually for this framework, the minimum TP would be within 15% of the extreme of the range, which is probably roughly this. So yeah, good chance it does want to play out still. And if it does, that should be a good target. But yeah, so this is an interesting observation. Quick pause. I'm sorry this video is very disjointed so far. I just had a lot of things like throughout this week since Sunday. I've seen so much stuff that stood out to me. I've been trading it pretty well. I've been basically flipping this account a few times, starting at 41 bucks and then flipping it, taking it out, flipping it, taking it out. And yeah, things have just been jumping out at me. And I made a video very recently talking about broader scope. So broadening my scope of what I'm looking for. And that was really from going from looking for, specific frameworks such as what this is right here. This is a squeeze reversal. We failed to take out the previous low, etc. Going from that to looking at a broader theme, which is a squeeze. So squeeze reversal, that is a framework, it's a very specific price action pattern. But the squeeze is the theme, the narrative behind what price is doing. So you could also have themes for a expansion theme or a price discovery theme, consolidation theme, anything you want. For me, the squeeze makes a lot of sense. And it also allows me to trust what price should be doing as well. So for example, down here, you'll see that we left perfect equal lows with a really long wick. Usually I'd see that and be like, holy crap, really long wick. There are going to be stops below that. Equal lows, more stops, no way I'm getting long. That might have even been in the back of my mind still, but the fact that we did that and I understood the narrative of a squeeze and the mechanics behind it enables me to actually trade it regardless. And by having a broader theme, I'm no longer trying to force things into a very small scope. And I'm not like if I took a long here and let's say the squeeze reversal framework wasn't present, then I might feel like I was doing something wrong because, well, this isn't my framework. However, because my my scope is now looking at themes rather than specific frameworks. Regardless if this is a specific framework or not, I can now still specialize in this type of price action. But you'll see it is getting very high resistance through here and just really sitting at the middle quite a bit. The way that's just sitting here, it does look like it might want to pop up once again into this high, which would make a lot of sense. But at the same time, perfect equal lows all the way through this range. And like this would be the first stop for sell side, which I'm very aware of, but I'm just trusting this framework at this point. So essentially, as soon as we hit this high, I'd like to get to break even and then just, yeah, basically demand it continues pushing because it is a little bit of a dodgier trade. What do I want to talk through? So what I would like to do today is really walk through the entire price action from this week so far. Starting with Friday, I actually got long right at the lows quite nicely. I'll give the logic behind that, and then the logic behind the trades I took at the Sunday Open. I took those on a different account that I've got here, and then I switched over to this account afterwards. So I'll show all of that, and I'll do it over here on a, see if I can get a clean layout. So I think there should be one clear. And just two should do perfectly well. Right, so here we go on gold. You can see that we have these old previous day highs up here. We just run them out. This is actually a squeeze type environment already. You can see that had this major pullback and then continuously grinds high. And what you'll notice through this range is that we continuously fail to take out the previous day low, like right there. Down in this area, like we get close to all these lows, but we failed to take them out. And that's all those signatures that we are squeezing the shorts. That results in this beautiful blow off top after printing this Friday or this Thursday long wick. Sells off aggressively back into the range after blowing out the highs. That's on a Monday. Consolidates through the week. That's a Friday right there. And on the Friday, we leave these perfect equal highs with long wicks after this long aggressive sell off. So anyone who's a bear, like sweet, this is the breakdown. Really aggressive sell off. Everyone's looking to get short. Perfects equal highs. That's resistance. Long wicks as well shows bearish rejection in quotation marks. And I mentioned I'd go break even at that point right there, so I will. Simply because just not a fan of, yeah, just break even will do fine. Just not a fan of the type of, yeah, it's just 50-50, let's say. And 50-50 isn't usually a very high probability way to trade. But yeah, this is that framework. But yeah, it's just not something that I'm willing to risk on at the moment because I'm quite happy with how I've done this week and something I've learnt, which is just another completely different tangent. But is that if you are going to do something right, stop afterwards because if I was to take heaps of amazing trades and then continue trading until I blew my accounts, I'm going to leave feeling really bad about everything and the whole experience, and I probably won't have motivation to do much. I won't have motivation to do much back testing, much review, and and then that's just a waste. Can probably move that up a bit more. At that point, that just becomes a bit of a waste. That'll do. Hitting the midnight and that high. I think that's pretty good. Sorry, back to what I was saying. If I was to do everything really well and then continue trading until I blow my account, which is what people typically do. They'll keep trading and their loss limit is 100% loss. And if you trade like that, you're basically guaranteed to hit your maximum loss limit every time. And if every single day you end feeling terrible about it, you're never going to have the motivation or the mindset that you're getting better and that everything's great. But if I was to do just one thing right, stop trading for the day, all of a sudden you're like, wow, I'm actually getting better. You've got the motivation to go and study, and it's just a better way to do it. So I'm just not willing to take a loss. Well, I am willing to take a loss, but I'm less willing to take losses in a 50-50 environment. That's why I closed one at break even and took the other one off really fast just there because it is, yeah, it's just not quite what I'm after. But all that aside, this is a very disjointed video. I'm very aware of that, but it's almost 2 a.m. Be interesting to see what 2 a.m. does. But jumping back over to gold over here and looking at exactly the price action we had, another feature that we have right here is that this is clearly a squeeze environment. Sure, we blew out the highs, but once again, very obvious sell-off. Already walked through those things there. But what you'll notice is that we failed to take out this low. So really obvious swing low, and we failed to take it out. Now, usually you'd look at that and be like, oh no, it has to hit that low. If it doesn't hit that low, then ICT is broken, or whatever you trade, or support and resistance is winning, and how's that possible? Well, the idea is that anyone who's short, let's say someone decided to sell this lower high, and they're looking for, cool, I want to see a break of that low down there. When price fails to break that low, aggressively moves against them, they're underwater all of a sudden. Where's their stop? Well, their stop's probably here. Okay, comes really close. Well, maybe they need a bit more room and they put their stop at the next obvious swing high. This is really key for squeezes, is when there's a liquidity gap. Liquidity gap is essentially when you got a pool of liquidity, a large range with no major swing highs and swing lows in it, indicating that there's a lot less liquidity between these two highs than at them. So anyone who doesn't have a stop there, they likely have their stop above this high. That's why I was very confident of us drawing up to this high, and also why I'm kind of a bit more 50-50 right now, because we just hit this high right there, had a really clean reaction off of it as well. So a bit more 50-50. But essentially going into this week, I was bullish. We had this sell-off on a Friday, heading into the close. That's very significant because a lot of the time Friday will create sentiment going into the weekend. If you ever see Friday react from a resistance area like such and entice lower right on a Friday, leaving a really long wick, a lot of the time that's trying to entice traders. And that's exactly what happened here. I dropped into this previous area of accumulation, once again indicating that this is a squeeze type environment because we have these perfect equal lows. Price comes really close to them, takes out deep internal range liquidity, and then rips up, even gapping up at the Sunday open. I was actually long from this area. I held through into Sunday open as well, and then was long throughout this entire range through here. So that played out really nicely. No, sorry, I'm talking about over this area. Yeah, this is the Sunday open. So I was long from this area. I wasn't long over here. I was long over here. But just the fact that we fell short of the buy side, we dropped into this previous area of accumulation and then get this gap up and a rally. All indicating that squeeze type characteristics, which gave me a lot of confidence that we would eventually hit this high. Drop down to the low time frame. I need to actually make this relatively fast because I could probably talk forever about just this week. It has been pretty clean. What I mean by look at gold right now, still ripping, 2 a.m. candle. This should blow out this high, hopefully. That would be very nice to see. And then above that, you need to get rid of all these drawings, really. Yeah, it's just bullish. But essentially, if we look at this area over here, we see another key characteristics of a squeeze, which is where you have a low and then a downtrend. So anyone who's seeing this is a lower low, lower high, lower low, lower high, lower low, lower high, lower low. However, that never happens. That's exactly where people get caught off guard of a downtrend, and then it rejects with a failure swing. This became a previous area of accumulation because if we zoom in a bit, you can see that we have ERL down here, so external range liquidity. But then above the external range, we have this really obvious impulse low, and we dive below that multiple times. So that's a very strong liquidity pool when you have an impulse low and an aggressive move. We hit that at a deep discount of this range. So very nice area. And you can see we spent a bunch of time down there into the close. So anyone who was short through this range, they're getting tripped offside, and the opposing party is accumulating their long position. So this area right here becomes a previous area of accumulation. When we then drop into that previous area of accumulation after failing to hit this buy side pull, that becomes reaccumulation. That just happened to happen right on a Friday. It was also below the low of day. So that's the low of day. We hit that with 1, 2, 3 drives. At the same time, we even had SMT with silver. Silver failed to take out this low, the low of day. And that resulted in a really nice long route down here. I actually initially took the long with just an entry with a stop below these lows, trusting that entire narrative, and then added into it, closed majority just at 4 p.m., held a micro lot over into the open, and we gapped up really nicely, and that delivered into this premium. And then looking at this range, you can see that, okay, well, we're showing all the signs that this is in fact a squeeze. If it's a squeeze, I want to see us get above the midpoint of this range, so right here. And once we're above the midpoint of the range, I'd like to see us fail to get back below the impulse origin. Impulse origin is essentially the displacement, so the beginning of the displacement that sent us into a premium of the range. Now, in this particular instance, that doesn't really exist because we kind of gapped above it. So you could kind of say this is the impulse origin. But it does hold very nicely, as you can see, and continues pushing higher. I'm going to show my executions in a moment. I'll just walk through in the 5 minute, then I'll drop down to the 1 minute. Falls just short of this buy side. This is very key actually, because there's a concept called liquidity mid, which is where when you have those two pools, so once again, a liquidity pool, a large gap, and another liquidity pool. So once again, that's very indicative that we could be squeezing in this area. You want to measure out the midpoint of that range. When price closes above that midpoint, that indicates that we are likely to hit this high. That's exactly what happens. We drop down and then go to a nice long entry there, raiding through this highs all the way up to 420, which is where I exited. So I should probably show a few entries, but that concept I just mentioned was the exact same as this. The liquidity midpoint, get a closure above, ends up drawing higher. So I can probably, this is the 15-second chart, but it'll just give more detail, I suppose. So you can see this is the Sunday open, getting above EQ of the range. I took some trades in here on a different account on this one, which I might as well show. So I was trusting very much that we would not head back to this area. The reason being is because we had just trapped traders short below this high. So this we should not return down there before we take their stops, and their stops are up through this range. So I trusted that we would not be selling off to before running higher. There are also plenty of traders who thought this was bullish at the Friday close and figured, okay, well, on Monday morning, Sunday open, I'm gonna buy gold. And I saw plenty of posts like this. And then we get this massive gap up. Now, most traders will think, okay, well, I'll wait for it to retrace and then I'll buy. And their expectation is, okay, I'm going to buy down to around, 330 or below. All of a sudden, price is up at 350 something, and they feel very uncomfortable buying. And I was aware of that, and that's partly why I trusted that we would not retrace deep, and we would indeed continue pushing higher. So getting along pretty near the open. So I took them off pretty fast. There was a bit more range than I expected initially. Tried getting long again up here, took them off at break even because it started showing signs it would retrace a bit deeper. However, at this point, this is where I was able to get long again. And the reason I got long here, and I trusted that this low would remain intact, is because this low is the impulse origin that traps traders offside. That's where we had this relatively high level, we had this retracement, kind of a downtrend. So anyone who's bearish with what they want to see the gap fill, they are getting short in this area. We spend a bunch of time down here and then an aggressive rally high through EQ. So this becomes the displacement through the midpoint of the range that traps traders on the wrong side of the market. So I trust that we would unlikely to take out this low. I was able to get long in this area. It came very close to that area. So I added one more just for good measure. Was able to hold throughout this entire area through here. And then we started heading up on the other side. And then at this point, I was very confident we should continue pushing high, and then scaled out as we hit this premium internal range. And then as we hit this high, and right up here, I just completely closed the position because this is actually meant to be my swing account. So I opened up a different account with Black Bull, and that's this current one here, and got long again. Logic behind this long was simply buying at the midpoint between these two pools. So another concept I won't go over right now. Getting this nice push high, scaling out into these highs, and then eventually you'll see this entry. So this entry was a really, really awesome entry. I'll walk through what that is all about and on a different chart. This chart, sorry. And I'll go to the 1 minute time frame. So you can see that we have the closure above the midpoint of the range. I should put the 1 minute over here actually. Closure above the midpoint of the range, and that indicates we were likely to continue drawing higher. Now, to start with, I had to think about, okay, where is it definitely not going to go to? Well, I believed it wouldn't go down this far because this consolidation was below this obvious buy side pull. Anyone who was looking to go short, they were going short in this sell-off and also in this area here. So we've got trapped traders below these levels. That's very far away, however. So I wasn't just going to buy here with a really wide stop. I need to see some lower time frame confirmation. In fact, just need to jump back over here. We may get a clean entry using that same concept. Sorry, I just need to grab the tool. So between that high, that is technically a swing high right there, so you could potentially use that. And trust that we should draw up to that level. I feel like I'd be more inclined to use the high simply because it really stands out as an obvious buy side pull. And it's not much higher up either. But if we can get a closure above that midpoint, and that could indicate that we are very likely to continue pushing into that high, and essentially I'd just be waiting for any sort of a pullback to accumulate a position down here, likely at around the midnight open slash that swing low right there. I don't think I'll take it on this account, however. I am still long on a challenge account, which I can bring up. So this one I held a bit further. I'd like to see if we can get a closure through that range, and then I might look to add. But at this point, the stop can be below this low because it's now a 5 minute order block. I'm going to move it. And if we fail to get above this this candle right here and begin breaking lower, then yeah, that wouldn't be as ideal. So I would probably just close out, to be honest. Um, yeah, so back over to this area down here. I can bring it up on this chart so we can watch both at the same time, which would be epic. Can find it. Oh, that's the wrong day. I'm very disoriented right now. Here we go. So back to this area. What I was looking for is us to show some low time frame price action to get involved with the long, so I wasn't just using it really wide stop. See, we had this aggressive move low, take out these obvious lows. We do not take out this really obvious low, which was significant because anyone who's looking for that short, that's likely going to be their target. If this candle doesn't close above, I might just close this out for now, and then I'll look to reaccumulate afterwards. Yeah, don't like that. Oh, I might have closed above. Not really. I'll just close two. And then the last one I can let run. So yeah, but what I liked is how we sold off aggressively. We then consolidate and spend a lot of time in this deep discount. So anyone who was looking to short, they're now getting trapped short. And then what I want to look for is for us to show indication that we're going to head to this high. And what that looks like is simply a closure above that midpoint. So we don't get it initially, we're just consolidating there, just close above it there, then aggressively drop back into the range. So I buy at these lows, we get this nice push high, and I scale out into these highs, eventually hitting those relative equal highs up here, blasting through those, and I just closed above that. And on challenge accounts, I closed basically at exactly 20, or at 18.8, or 17.8 actually. But essentially, assuming that we could have a reaction from 20 simply because we're breaking out above these relative equal highs, quite extended already, and it's an institutional level, so it was likely to have a movement from that area. This got way too many drawings on it, I know, but yeah, I came back in the London session. I completely messed this trade up, unfortunately. Now, it would have been a really good trade. See, I've got this beautiful trend line kind of printed out. I figured that we would just rip up through this area. Got long initially, but then it just started failing and fading back down. As it faded back down, I started figuring, okay, well, it could just be taking out some short-term lows and then hitting higher again, or it could be selling off a bit deeper and heading down to these smooth lows down here, this hourly low, etc. And so I started second guessing myself, and I actually ended up, if you look here, I actually ended up so being a long initially, getting stopped out, getting long again, and then getting stopped out straight away. At this point, I was like, you know what, this is definitely a short. Tried getting short, and yeah, just got blown out basically. Ended up getting this nice displacement high, so I took a long there, rode that up into the highs, and was essentially break even for this area. But yeah, let's see. I need to see some more time frames. I'm getting disoriented already. Oh yeah, so this is where we are at. We hadn't hit my drawn liquidity, which was this impulse high up here. So we're still very far away from this area. And that was that trend line I just mentioned, running higher. It hit the liquidity midpoint. It did close above it on 15 minutes, and then we sell off aggressively into the range. Now, I wasn't awake during this time. This is going to the New York session. I just trade the Asia in London at the moment, and the New York PM as well. But really like how we had this impulse low. We then, at the relative equal high level, an impulse low, we drop down, we raise that out, and also rate out the low below that. So this becomes your decoy buffer low. We're likely on the low, I haven't actually looked yet, but on the low time frame, we likely retested that or not. But in any case, really nice reaction, rallies up. Now this one, the market maker model framework is very obvious. We've got that intermediate term low, rapid displacement, and now we're looking for that partial entry into a gap and then make a new high. Because of the squeeze top environment, I expected that once we'd hit, you see this, I've got this marked out as ERL. Once we'd broken a obvious low, put in a ERL kind of type of price action. Like, I know this is technically internal range within this higher range, but when you have a expectation of making a range like this and we have a low created, a shift higher, that becomes a dealing range from this high to this low. When we then break that range and then have a market structure shift higher again, that becomes external range, and this is now the current dealing range is like that. So that's why this marked ERL, and because we're in that squeeze environment, I trusted that we were likely to come very close to it. However, not take it out and make a new high. Exactly what happens is consolidate sideways and eventually eventually run out the highs. That's what it is. It's on the wrong thing, but yeah, I took some longs in this area as well. I held some into the open today on Tuesday open. We gap up. I'm like, sweet, it's going to rip straight to this high. It doesn't quite reach it. It starts pulling back. I'm up heaps. I add into the position. I add more down here, and then it just rips lower. Luckily, I was aware of the market structure, and I was able to actually stop myself from taking a loss in this area, and I will show exactly how I achieved that. If I run to where we are at, so this is that consolidation I mentioned. Once we created this consolidation from this high down to this low, that's your dealing range. The fact that we spent all this time painting both sides of the range, this becomes a balanced price range. Balanced price range, the midpoint should act as a brick wall. Brick wall means that we will not close below it if we're bullish. If we close below it, we're bearish. So when we sold off aggressively, we got that closure below. I instantly closed my positions, and that was a great move to do. I did, however, decide it was a good idea to get short instead. And as you can see, sure, the short worked out perfectly fine, but that's so high resistance that if I took any wins, they were very, very difficult to get. And I took more stop outs than anything. Even though price moved lower, it just was not worth flipping my bias short when my actual drawn liquidity had not yet been hit, which was that, whoops, wrong one. My drawn liquidity had not been hit, which is that impulse high. And then we have this, so yeah, I shouldn't have been looking for a short. But what I love here is how we dropped into this range. We did not get to this very obvious low down here. Instead, we took out this low with a 3 drive pattern. So you can see 1 drive here, 2 drives, 3 drives, rallies higher. Now in this area, this is another area that was actually really cool. And you can see it's not looking too healthy right now, but we'll see. I wanted to get long in this area essentially. I got long initially through this range. I really liked how we had this long wick right here. And I imagined there'd be traders who are trapped above that. We also have a liquidity gap between that high and that high. We clearly closed above the midpoint there, failed to take out that high, start pulling back into the range. So I was already long from this area. And then I decided to add on the way back down. So I added there and there as well, thinking that the stop loss can go below this low because on the 5-minute time frame, we had a nice long wick. We had failed to reach the midpoint of that wick, which is a signature of strength. And I'll show that to you real quick over here. So long wick, we failed to hit the midpoint right there, rallies higher, showing strength. So I assumed this is likely to continue pushing. That's why I bought around this area here. It drops a lot deeper than I anticipated. And then at this point, I'm thinking, okay, well, it should be bullish, but it's kind of looking a bit dodgy. And I started measuring out the midpoint between that low and the next low. As you can see, it is just wicking below it, wicking below it, wicking below it, and then we close below the low right there. I closed out the position right there. I was like, okay, yeah, it's going to take out this low. I'm just going to close it. Then we get this aggressive rip back up. Now I was actually able to get back on this position and ride it up into the range. And we'll jump over the other ones just so I can show the executions for it. But yeah, and there's a lot, I know. I know there's a lot of arrows here, but they were profitable, so it's all good. But that's the area that wasn't too happy with. Trying to go short, but it just didn't. It was just so high resistance, it wasn't even worth it. And then you can see this area here. So getting along initially, riding it up, taking a partial at the high, and then trying to edge back in as we retrace into the range, trusting we shouldn't take out this low. Comes super close, and I'm like, you know what, screw it, I'm just closing out my position. So I closed it, got flat. We then get this rally, and as soon as it rallies, I'm like, knew it. But what's cool about this is that all this time in this area, we were, one, respecting the mean threshold from this opening price down to the lows, the midpoint's right there. We were actually respecting that, so that is a order block. That midline is the mean threshold, perfectly respected. We're spending a whole bunch of time at a deep discount below a really obvious drop, so we're trapping traders short. That is really key because when we then get a displacement up through this range, we can now measure out I call it the SR mid, the squeeze reversal mid, but essentially from the obvious swing high down to the extreme. That midpoint, you can see I've already got it drawn out. That's essentially like the midpoint of the range. When we get a clear displacement through that from an area where we have the narrative of having trapped traders, that becomes what, I need a 15-second chart to show this, but that gives the narrative that we have now trapped traders offside. So a whole bunch of time spent consolidating at a discount. We then get this aggressive rally through the midpoint of the range. We close multiple candles above that midpoint without retesting that midpoint. So that is a strong closure through the SR mid. We now have the narrative of there being trapped traders down here. If there are trapped traders in this range, that means that price will not want to let them mitigate their position by returning down to that impulse origin. And that's exactly what we see here. It drifts lower, however, it fails to reach this area. That's why I was able to get long and put a stop below that low. And then row that up into the range, taking partials as we hit the premium ends of this range. On the challenge account, I held a bit higher up as well. We then hit the high, and I'm like, oh, you know what, it's just going to pop. And this was a silly trade, really. We had literally hit external range. We were extremely extended, and I was just a bit too impatient and just bought at the highs. And then eventually stopped out at break even on that, or a very, very small paper cut. Bought here with the logic that, okay, well, this sharp pullback right here, this is kind of like anyone who wants to go short, they probably went short here with this off above this high, and now they're trapped underwater. However, we had already hit this buy side pull, so that wasn't really valid, and had my stop below that, and it gets taken out right there. Hourly low, I actually had a limit to buy, sitting right here, and the next candle below this hourly low never hits it, and then rallies higher. But that was also a signature of a squeeze, failing to take out the previous low, ripping higher, and now we have this happening. So interesting to see how we failed to close above that midpoint and then sold off. And that's also a good observation for me to make right now, is the fact that if I had used this lower 1 minute swing high, that was just not really significant for this particular range, and that would have just failed completely. But using the obvious swing high, the next obvious swing high, respecting that midpoint, and it sells off. And you can actually use this if you were anticipating a reversal from a certain area. Beautiful way to use it, and I can give you a quick example of that as well from relatively recently down here. This was an area I was long from as well, but essentially I was looking at getting long from here because we'd just taken out all the sell side down here. I expected we would not take out this low, and we were rating this low. So if I measure out the midpoint between these two pools, see that that's the quality mid. The very fact we respected that and we failed to get through it, that's a nice strong confidence that this could in fact be a good low. So it's another way to use it. The more powerful way, in my opinion, is waiting for that closure beyond the midpoint and then getting long, or whatever side it is. But yeah, I'm kind of getting a bit out of breath from talking nonstop and rambling, and it has been very, yeah, very disjointed. I'm aware, and I haven't even got to half the things I am thinking about. But I've got a really cool whiteboard that's got a whole bunch of drawings on it, and I've taken a photo of that. So that is in my memory, and talking through it like this has just helped drill some of those concepts deeper in. This is kind of me in the testing phase, just testing out, how it all works. Isn't the cleanest executions, and you can see getting stopped out right there. But it's still, but I'm beginning to see exactly how I can be doing things, and just areas like this where in the past I would have been completely confused back here. I'd be like, wait, but we have to take out these equal lows. Oh, but is it bearish or is it bullish? Well, if it's bullish, then why is it leaving so many smooth lows through here? Like, I'd be super confused. But now that I'm understanding the squeeze theme and the narratives behind that theme, I can then read price action and see exactly how it's working for me, even when it might be a bit deceptive otherwise. And that is just a really powerful way to look at price, in my opinion. So, really excited for that. I have these two challenge counts at the moment. Got two 5K challenges. It's still in phase one, but these are the first challenges I've done in a few months, actually. And I'm using this one for Asia session / New York PM. You can see a bit red at the end of the day today. But yeah, using one for Asia, New York PM, and the other one I'm using for London. And see execution somewhere. Where are we? But there are those trades I was talking about before where we had getting long at that reversal, taking a partial at the high, getting long again, and then getting stopped out right at the lows. Well, not stopped out, but closing my trade manually after we got the closure below. Then rallies up, getting long, and then held that into these highs. Once again, trying to add and then getting stopped out below this low, missing the rest of the move. But still overall, very happy that I'm able to catch these. And also when I see the squeeze narrative, I'm very okay with leaning in aggressively. And that's exactly where I need to be, because it means that when I recognize what that price action is exactly what I'm looking for in future, when I'm more dialed in with my executions and exactly what I'm looking to do, I'll be able to really, really lean in and just aggressively scale into positions. Also, having the narrative and the understanding that we are able to rally in one direction and not take out previous lows will enable me to massively scale into the position, even though for most people it might feel super sketchy. I can use that narrative to my advantage. Likely going to be a nice long entry here, actually, so be interesting to see how this plays out. What I've been looking for essentially is measuring out the midpoint of this range to start with. So from this low up to the high, measuring out that midpoint, want to see if we can get a strong closure through that midpoint. Also, just reading the narrative on the low time frame. Are we inviting people to short? And once we do that, are we then ripping up against them? But yeah, they'll essentially do for now, though. It's 2:30 a.m. So EST. so I might watch price a little bit. But yeah, again, we've already hit the hourly impulse high, shown signs of rejection from it, then had this aggressive rally back up. So I'm not too interested in anything right here. And as I mentioned earlier, I want to finish on a high note, so I've got the energy to do these more in-depth reviews and actually do a bunch of markups as well, because this is messy. Like, don't get me wrong, I don't trade like this. This is my execution chart. This is the chart that I'm literally just on and drawing up random lines everywhere, taking screenshots, doing it again. And then I usually come back later in the day with a clean chart and I just do simple lines and make it as clean as possible. But yeah, that'll do for this video.